Getting the absolute best mortgage interest rate is a big deal. The mortgage interest rate impacts things like your payment and the total amount of interest that you'll be paying to the bank overall. So how can you get the best mortgage interest rate? As a heads up, this video is going to have a lot in it. I want it to be as helpful as possible. So if there's a certain portion that you're looking for, go ahead and check out the timestamps in the description, and that can help you navigate this video with ease. Let's start with the things that you cannot control. This is the market. The market fluctuates. It goes up and down, kind of like the stock market. Interest rates are always moving. The market that home loans and mortgage interest rates are tied to is what's called the mortgage-backed security market. Essentially, it's a mortgage bond that people can buy or sell or trade. That's kind of like a stock. If people are buying mortgage-backed securities, then mortgage interest rates go down. If mortgage-backed securities are being sold, well, then mortgage interest rates are going to go up. Again, this is one of those things that you can't control, and you probably shouldn't put a ton of focus on it, but it's important to know to properly set your expectations. Now, there's a myth out there that home loan interest rates, the rate you pay on your mortgage, is directly tied to the Fed. That's not true. Essentially, when the Fed cuts rates, that is making an impact on short-term money, not on long-term home loans. But if you do see something in the news about mortgage-backed security market movement, that could be a trigger to say, maybe I should look into something. For a more detailed explanation on the Fed's relationship to mortgage-backed securities or the mortgage-backed security market and how it impacts rates directly, we did a blog and even did another video on this topic. So check out those links in the description as well. Now let's talk about the things that you can control that impact your mortgage interest rate. Now, as part of this, there's going to be kind of two categories. There's going to be things that are associated with your personal finances, and then there's going to be things associated with your choices of mortgage lender. First, let's talk about your choices. So when you get a home loan, you can choose the type of lending institution that you get a mortgage from. You can choose a retail bank. These are the ones that you're used to seeing on the streets, the big name box banks like the Wells Fargo and Chases and Bank of America of the world. And you can also use what's called a correspondent lender. These are lenders that maybe are a little more smaller or boutique, but they fund loans in their own name. They have the money and they fund the loan, similar to those bigger lenders. Then there's a third option. This is called the mortgage broker. Now, a mortgage broker, they got a bad name back in the recession of 08 and 09. But the truth is, the absolute best interest rate out there for mortgages and home loans is through a mortgage broker. That's right. Your choice of who you use to get a home loan impacts your interest rate heavily in this way. The lender that was great for your neighbor may not be the lender that's best for you. So a broker can find a customized solution, shop it around, and ensure your interest rate is the absolute best. Now, full disclosure, I'm biased. Stewardship is a mortgage broker. But here's the thing. Every year when I renew my license, I have the opportunity to change how I offer loans to our community. I can change from a broker to a correspondent lender with ease. But I choose to stay as a broker because every year, every time I do the math, it's validated that the absolute best offerings for my community, for the people I love and care about, it's through a mortgage broker. All right, so here's the last and maybe even the biggest piece of the puzzle, your personal finances. Now, often people focus on credit. They think the better the credit score, the better the interest rate. And yeah, there's truth to that. The higher credit score you have, the better opportunities that are going to be made available to you when trying to get a home loan. Now, the target credit score is 760. It doesn't matter if your credit score is 761 or 800. Either way, if you're in that range, you're going to be in the top tier. But here's the other thing we need to talk about. It's your assets. It's going to be your income. So the income that you currently have versus the new debt that you have with this loan, it is put together in what's called a debt ratio. And the higher your debt ratio is, the riskier your loan is to the bank. In addition, your assets matter. So the amount of money that you're going to have in the bank after you've bought the home or after the loan is funded, that lets them know how much money you have saved. So if something bad happened, you might have the ability to keep making payments until you were able to recover. So your assets, they also play into the risk of your loan with this lender. And so is the down payment. This has an impact as well. The more money that you put down, the more equity there is in the home. And that equity, that too impacts the risk to the lender. Now, you've heard me say the word risk a lot, and that's really the focus of your personal financial situation. So when the lender is evaluating your income, your assets, your credit score, those areas of your personal finances, what they're really evaluating is your risk. The higher the risk, the higher the rate. So here are 3 things that you can focus on to try and get the best mortgage interest rate. 1, try to keep your credit score above 760. 2, save as much money as you can. Having money in the bank or putting money towards the down payment, that can help your interest rate. And last, make sure you use a mortgage broker. Mortgage brokers, far and away, are able to offer you the absolute best interest rates on the market. Speaking of market, as we mentioned in the beginning of this video, there are things that are outside of your control that do impact the interest rate. It's not the Fed like most people think, it's the mortgage-backed securities market. But again, you can't control it. So don't put too big of a focus on it. If you thought this video was helpful, would you share it? You might want to share it with somebody who's in the process of buying a home now or a realtor who helps others buy homes all the time. And if you appreciated the information, subscribe. Next week, we're going to talk about what it takes to qualify for a home loan. Thanks for watching. We'll see you next week.